Welcome to this event hosted by Marvin Labs. In this session, we're digging into the major themes and data emerging from Q1 earnings season. From Walmart to Marriott, management teams are navigating rising tariffs and macro volatility with a mix of supply chain shifts, pricing discipline, and cost controls. Across sectors, companies are redefining how they defend margins without stalling growth. In the tech sector, hyperscalers like Meta and Microsoft are making record infrastructure investments. We'll also discuss Tesla's growth, deceleration, Uber's margin expansion, and Disney's strategic surprise in the Middle East with a theme park. We might just touch upon a long-promised driverless car. We'll also look at how AI is changing the way analysts work through earnings and have a sneak peek at a new guidance model from Marvin Labs. Whether you model fundamentals, monitor positioning, or track sentiment, we hope today's discussion sharpens your view on what matters this quarter and what's coming next. But before we go into questions, let me first introduce Alex Hoffman, CEO and co-founder of Marvin Labs, and Anupriya Holder, an equity research analyst. Alex, I'll hand over to you first to introduce yourself and Marvin Labs.
Yeah, hi, I'm Alex. As James said, I'm the founder and CEO of Marvin Labs. I have spent my career predominantly around financial markets, starting out on the investment banking side, transitioning into the buy side, and in between kind of founding a startup, selling that. And now I'm back with Marvin Labs, and what we are doing is we're building a co-pilot for professional investors that helps them to qualitative research into companies.
That's great. And Anupriya, would you like to give us a little bit about your background? I know you very closely follow the markets and you've had a lot of experience in equity research as an equity research analyst. So it'd be good to get a little bit from yourself about your background and some of the areas you specialize in.
Thank you so much, James. So I've been an equity analyst back from the year 2016, and I got an opportunity to get acquainted with Marvin Labs recently, and I've been using the reports. So initially started off analyzing the Indian equity market, and slowly I moved forward analyzing, getting into like international and starting to know more about the stock listed in NYSE, and it's a good experience right now. So it's been going good. I completed my master's from Queen Mary University of London. It ended in January this year, and I must mention that I'm thankful to James and Alex for bringing me up to here. Thank you so much.
No, it's a pleasure. You're here because your analysis is good. If people don't follow you on LinkedIn, they should take a look at some of your analysis and your graphs. It's really insightful. So I guess that's quite a nice segue, Anupriya, to if we start with yourself with the first question, which Alex and myself will also talk through, which I think our audience are probably very interested to know for the three of us, what stood out in the quarter 1 25 earnings for us as people that follow the markets and the trends. So if I put that question to you first, it was a sort of quarter packed with all sorts of different things, but what stood out for you? What were the big standouts for you, Anupriya?
So what I am seeing most in these financial statements is like people are kind of ready. They're about the US, like which Mr. Donald Trump stepping in. But what followed that, they're not ready, and there's a huge impact on the tariff. And I must mention that supply chain got disrupted, and there is Red Sea disruptions, and the continuous ongoing war thus came in. And definitely, I must mention the currency fluctuations. Most of the companies, they are scared about what they're going to earn from abroad, their abroad revenue. They were worried about that part, and the same thing got affected with companies like Starbucks, and some other companies said that they'll meet a loss. One significant revenue loss I saw was of Swiss Re, which lost nearly $0.9 billion because of the US fire. So yeah, there's a different loss and multiple reasons, but the biggest one, like I am seeing, is like the AI-driven investment that is doing good, and the US tariff. And I must say they are trying to make like get a seat in the table. I must say, the companies, they are bringing in new things in their life. They're starting to grow. In short, they're like looking more into the investment part, and they're saying about their future plans, talking of their capital investments. In short, they don't have anything particularly to contributing to the second quarter, near following quarters. Instead, they're talking about the long-term investments. So yeah, they are more cautious, I must say.
Very interesting observations there. Do you want to unpack some of those and add to those, Alex?
Yeah, so I think I kind of mostly agree. I think the very big topic has been macro, right? It's tariffs, supply chain disruptions, whatever else the the political uncertainty in the US brings. So I think this has been the overarching topic. When I thought about this, I actually thought, it is all macro. I think Anapriya makes some good points on kind of more micro factors, companies starting to talk about their investment portfolios, their investment projects. I think that's clearly something. I know we'll later on talk a bit about that happening on the hyperscaler AI side. But to me, it's been that, and it's macro. It's basically nothing else idiosyncratic for companies matters. Is all macro and investment.
Yeah, no, I'm with you. I'm with both of you, actually. I think the three things mean the same thing. Companies feeling the pressure from tariffs and sort of unpredictable environment. And it's actually fascinating how some have chosen to play that, playing perhaps a more politically straighter bat than others in a cricket sense, than others perhaps going, out there a bit more. I think the AI infrastructure investments, Meta and Microsoft especially, that's been an interesting one. And I guess the sort of slightly left of field market piece for me was, it was interesting to see some of the CEOs attempting to use AI for avatars to present their results and their earnings. So I think Klarna was one, etc. It's just, I was just curious to see that, that that's a trend I haven't spotted before that appeared in this quarter. But I guess leading on, I suppose, is a sort of secondary question that's logical, which is about which companies handled the macro environment well or not so well. I think for me, that goes back to my point about the behaviors from some of the companies are very different. Alex, what's your thoughts on that?
Yeah. I think there's really it's been a story of kind of two halves of the earnings release cycle that have worked slightly differently, and there's been a kind of cosmic event in the middle. So until about 2-3 weeks ago, like, you saw companies discuss tariff impacts, pricing implications, kind of mostly honestly with their investors, right? You've seen some stories, Ford's having some like massive tariff impacts. A company like RTX, the former Raytheon, being kind of the most American company you can imagine, having an almost $1 billion a year impact from tariffs, just on account of their imports the steel imports predominantly being more expensive. Which is kind of weird. And then you have this one event where the US president shouted at Walmart after they suggested that 25% tariffs on anything might lead to some price increases. And after that, kind of everybody crammed down, I think, because nobody wants to be singled out again. So you've seen, in particular in retail space, but across the board, companies basically using IR and PR tested answers to questions, right? We're going to push some of that. We're going to collaborate with our suppliers to make sure that our customers don't see the pricing impact. We intend to keep prices as unchanged. But it's basically a politically correct answer. It's almost surely not management's actual view. And it's a bit disappointing seeing that in the market where companies have to, it's a weird way of phrasing this, but kind of for reasons that are not driven by their desire to improve investor communication, have had to moderate their responses and be less than forthright with investors.
Yeah, no, I'd agree with that. And Annie Priya, what's your thoughts on that in terms of some companies playing the political line and others maybe less so, and perhaps, as you say, Alex, getting the consequences of political shouting, as it were.
I feel assume from at this point is definitely companies they want to make a profit margin, and what they are saying they will be getting the feeling this pain because they do import huge product from China, and no matter how much they try with like nearshoring options, and compiling the product in the nearby, but at one point they will be feeling the heat of the tariffs, and what the companies or like we as buyers may be missing out is that the companies may compromise on the products, and at that point there may be less sale of the high brand products, which is actually happening. There is a decline in the sale of the luxury products in the US market and a little bit in the European market, US for the fear of the recession, and for the Europe the less wage distribution. Comparatively in the Middle East, because their people are like still into this stuff, but at one point we will be feeling it, and the products will be compromised and qualities will be compromised, and unless like the companies are into increasing the prices or like bringing it down, it's still under the question, I believe.
I think you're right. I think Alex, linking back to Alex's point, I did find it hard to believe some of the management teams could actually believe some of their own statements. I mean, major retailers promising not to increase pricing. That's a bold claim to make, and you kind of know. Others, I think they were a bit smarter. I mean, Target, for example, you could see they didn't chase discounts to boost volume. They're playing a different type of game. I think the other bit that's quite interesting is the other way round, which perhaps there's a bit of a pattern here with Tesla, without getting too political with what Musk's doing, but they seem out of sync for me at the moment. Whether it be Q1, as you're talking about robo taxis as growth is slowing, and all this kind of stuff, and back to the model of big promises over what's actually going on. And I do wonder to the extent to which they were the most confused. I think earnings and updates, and even their announcement, I think yesterday, about European sales reflects this as well. For me, they just seem a bit confused at the moment.
Yeah, I mean, I think Tesla is such a uniquely communicating company. Because I think I saw somebody mention this yesterday, that Elon Musk is basically, it's their CEO, is the lead analyst on Wall Street, and it's their marketing mascot. And it's such an unusually communicating company, right? And they're probably the only ones. I think last call we discussed about, they have made this claim about robo taxis or automated driving for 10 years. It's always 15 months away. And it's moving up. They're the only company that can really do that, right? They're not being called out on it. They always have kind of some smart sounding explanation, and they can do that. Like if you don't have the standing of an Elon Musk, and literally just of an Elon Musk, you can't do this, right? If you're the random CEO of Target or of Walmart, right? You can't do that. You don't have the loyal following in capital markets that just going to believe your crazy claims. So I think Tesla is always an unusual company. It's always an unusually communicating company.
No, I'd agree with that. I think there's always been, and you could see it, I think, in the earnings call, wasn't it? There was a section from Elon Musk where he was back to selling the big vision, the big the land of milk and honey kind of thing in the future was in there. What do you think, Annie Priya? Do you have the same sort of view with us about Tesla, or do you have a slightly different perspective, given what they posted in Q1 plus their announcement and their figures for Europe, which I think have nearly halved the sales in Europe? I think Annie Priya might have frozen there. Are you with us?
Oh, she's frozen.
Okay, well, she's frozen. She'll be back in a second, no doubt. I'm sure she'll dial back in. But we've had a couple of points and a couple of questions. So thank you, Vivek Parwar. Actually, thanks for giving us a compliment about organising the event. We do organise them monthly and have them very market focused. So for those of you that are joining for the first time, these events are hosted every month. We've got a question as well from Vivek, which says, please convey which are the 3 top sectors, according to you, that will be impacted by high tariffs. Or Alex, do you want to have a crack at that one first? Or
I think it's really a question who really isn't. So, I mean, retail is the obvious one, right? Because it's the one we'll all see and all experience in our pocketbooks. So that is clearly the big one, and the big one where you can't hide price increases unnecessarily. Plus, you're operating on a razor-thin margin, right? Walmart has a 3-4% net income margin. So, like even if you wanted to, right, you cannot observe, you cannot internalize any price increase from tariffs. Right? Unlike in tech, right, where you like technically, Tesla, like somebody like an Apple can internalize some of the tariff pressures, and I think really they're thinking about that. If the 25 or 50% or whatever tariff rate it is on iPhones is coming, then I think there's a realistic case that they're just internalizing it. So I think retail is the big one. It is particularly. I think it's particularly kind of everyday retail. There's a bit of discretionary retail as well, who you kind of see some impact. And then it's kind of like it's a lot of people building stuff out of metal, and that can be fighter jet, that can be cars, that can be everyone. But these companies typically have, particularly if you single out car manufacturers, right? It's complex supply chains, and it's very international supply chains. It's being impacted to the basic commodity with tariffs, and it's supply chains that are complicated, and that where goods are moving back and forth across country borders 5, 10, 20 times. And there's no way around this. I think that is actually to be the biggest thing. It's not just the tariff. It's the incredible disruption this does to supply chains, and it's not an easy job to remodel supply chains.
No, I mean, and the scale. I mean, I've worked for large global retailers, Tesco and Marks and Spencers, and this is not a short job either. It takes quite some time to pivot. I think I agree with you about the sectors, the consumer goods, definitely. I thought it was interesting when you read Walt Disney's sort of picture, it's still sort of maybe more at the luxury, sort of indulgence end of the market versus Walmart, maybe, which is more standard, goods, etc. So I think the consumer piece, be interesting to see how it maps out, between the different types of company. I think I agree with you about the sort of industrial manufacturing and RTX, and then of course the tech side of things in terms of semiconductors, etc. So I think right to the beginning, your first point, all sectors have been impacted by that T word, and I think one of the challenges is that the playing field's not leveled out now. It could change next week and could change again, and I think one thing that the companies are going to have to cope with, both now and going forwards, and how they adapt their strategies, is the fact that, was it Donald Rumsfeld once said, was the only known is the unknown, or something like that. You're going to be dealing with that. If you're a firm like Walmart and you're changing supply chain models, or even Nvidia, etc., doing that and then finding the landscape's changed again 1 month from now is going to be really, really hard for them to navigate. Anupriya, what do you think? I can see you're back now, so that's good. The question was, what were the 3 top sectors that we think would be impacted by high tariffs? And obviously the obvious question is everything, but what were the 3 sort of top ones? What's your thoughts from where you've been looking at the market and analysing earnings results and releases?
So James, basically, since I'm in India and the neighboring country China, we are one of the suppliers. And what I can see from here, the sectors that's getting mostly impacted are technological. Apple, the first thought that comes to our head right now. The second one is like clothes and particularly cotton products. That those things come more for lot from China and little bit from Bangladesh also. And then there are the delivery disruption, the residency disruption we always talk about. And the third sector, I believe, as a consequence of this, could be the food, because people, they have to make margin, they have to, and there are chances that the agricultural products may get affected as a result of this. The entire things is affected. Starting from the food chain, like each part of it, partially. It's like long term, but it's getting complicated slowly, slowly. And the worst part is of this is the tariff part is getting changed. So it's like dynamic. Suddenly we are seeing that there is a 25% tariff imposed on Apple product, and we are not sure whether it's gonna last or not. Even they took this gigantic effort of like shipping all their products from India to US 3 days before the tariff gets started. So I must say people are like worried, and they are more worried about the products they are buying. It's like a cautious thing, I guess.
Yeah, and I mean, obviously being closer to Europe in the United Kingdom, where I'm based, we've seen the current play out between the EU and the US on this topic. I mean, it's interesting when you say 25%, I'm almost minded to say only 25%. It could be very different. But I think it's a very difficult time, having been a global head myself in HSBC, to try and set strategy and then navigate short-term supply chains as well as labor force, kind of considerations. It's really, really difficult, because I wonder as well about the knock-on effect. I haven't seen a huge amount in earnings about the sort of knock-on effect yet to the people side of results and culture and planning. But I suspect that's coming. You can't just hire people en masse because tariffs are suddenly favourable, or you can't just remove huge swathes of people from locations just because the market has moved against you in terms of tariffs. It's not easy to remove that number of people, and may take 6 months to a year. In which case, as you said, things might have changed again. So it's an interesting one. You touched upon it there, which is actually a nice question to sort of come to next. So, which is, how are companies really protecting margin, or are they protecting margin without losing growth? We've mentioned a couple of times people's approach towards pricing in the face of tariffs. But what's your thought on that from what you've seen, and you Priya, around margin pricing and how companies are navigating that with alongside supply chain?
So what I have observed about these financial statements is like, uh, what they are planning is like they will distribute the cost and they won't let it pass on to the pass. But that's a big challenge. And again, when you're like doing the protecting the margin, they are taking strategies. Tech companies, as we all know, they are stepping into layoffs. They are like filtering out employees. But again, that's something we don't want to happen. And definitely they are making capital investments. So at this point, the major question is who is having the best software for any disruptive products. And they're always in a fight. And definitely the next best question is which one will get as the best product, whether it is like we can get it from ChatGPT, or you can get it from Meta AI, or you can get it from Perplexity. So the entire focus is going on R&D. And yeah, the consequence is again the labor force, the employees are getting more of work pressure. But what I can see, and I can find among my friends, is this thing is like slowly increasing, and like it's gonna take time, but the R&D investment is the best one, I must say.
What do you think, Alex? What's your thoughts on the margin pricing dynamic?
Yeah, I mean, there's only, so I think what a lot of companies will communicate right now is a matter of, we're going to work with our suppliers and see making it work. There's only kind of so much stuff that you can do angrily staring at your suppliers and waiting who flinches first. So, you have to, I think, live up to the reality that you either have to raise pricing, which might have a competitive reaction, that you either reduce margins, or that you kind of look at your portfolio mix and take out some products. I know some retailers discussed, that some products are now on the chopping block because you cannot kind of profitably or at a kind of target margin sell them anymore. So I think these are your principal options, and I think everybody will kind of arrive at some mix of those. But I mean, it's unrealistic to believe some companies that are still communicating, hey, we're gonna just shout at our suppliers for a long time and expect them to eat up. It's effectively just a shock in the input price, and somebody along the chain has to absorb it. And I think it's a fallacy to assume that it's some unseen entity somewhere that is absorbing it. At least some of it will be absorbed by the consumer, and some of it will be absorbed by the big American, big international brands.
Yeah, no, I agree. I mean, I didn't see too much in your retail earnings statements from some of the big brands about sort of shrinkflation. I've seen that used. I mean, I've seen it myself in UK retailers like Tesco, where I worked, where you shrink down to maintain the pricing and the margin, but it's not a great strategy in terms of consumers soon start to realise the chocolate bar that was 100 grams is now 90 grams but costs the same, etc., etc. The other bit I think is an interesting one about mixing, as you said there, around product range, mixing the range of products, higher volume, lower margin products mixed in to make it kind of look more volume versus higher margin, lower volume to kind of push margin through. So it's an interesting mix. I think that's one to watch in NVIDIA's announcements later on today. I'm particularly interested to see how they manage some of these questions around the pricing and the sort of cost dynamic. But I think also the other question for me about pricing and margin that I've seen in Q1 earnings is a lot of people making statements, as you said there, about not putting prices up. But if you take a longer view than 6, 12 or 18 months, it's very hard to make that sort of judgment right now because, you've got the pressures coming on the labour side and the taxation side predominantly. Then alongside that, you've got the impact of tariffs. So being able to make a statement like some did that said, no, we won't be putting it up, it's never going to be passed through. I think that's incredible to say that. And as you said, some people are possibly not even convinced themselves that they're actually believing their own statements. Which sort of brings me on to go on, sorry, Alex.
I think a lot of people have just been forced to make the statement, right? I mean, it's kind of if you think about this from the perspective of an executive making the statement, right? It is, you're being pressured into this. It's a sensible thing to do. Nobody's going to hold you accountable for this. I think in first quarter, a lot of, in particular, retailers still had the luxury of, like, a lot of their inventory is still pre-tariff. So you really haven't seen margin impact. Everybody is going to be understandable if you are, making some washed statements that you really don't believe. Because, like, in 3 months' time, who knows what tariff regime we are under, and like, no analyst or the market is going to hold you really accountable for what you said now. I don't think so. So it is the dominant strategy for an executive to do now, right? I mean, just make some statement that your PR is fine with on it. You don't have the margin impact yet, so you're not forced to have any commentary about what you've actually done. You're mostly still talking about the future. Who knows what the future is going to look like? And I think really Q2 is going to be the interesting one, right? Q2, you'll have impacts, right? Because people had to buy tariff products because they don't have that much inventory. So really, you have to, for the first time, then as an executive, make some assessment about what it is. Right now, it's all talk. nobody's going to hold you accountable for it, I think. So, well, nobody other than the White House is going to hold you accountable for it. So,
I think
why not make a statement that placates the only people that really care?
I think that's a very good point. Maybe it's explaining why so many CEOs are starting to use avatars to present their results, because they can't be held accountable. Aside from the message not being held accountable, they didn't actually say it because it was the person, it was an avatar. I think you make a good point there about Q2, that I think that's where the almost like the veneer gets rubbed off, because you can say what you like now because the changes are too near term, but you can't hide from those changes, maybe Q2, Q3, etc. And Priya, what's your thoughts on this one around sort of the outlook into Q2? And also, do you think as well that the sort of tone has changed from CEOs this quarter, about being careful or perhaps being more pragmatic with what they say?
Tone with the CEOs, yeah, definitely it has changed. They are extremely cautious right now. Even like as a discussion earlier, they even don't know what is happening next. But what the bigger thing is, like the a normal person is doing right now is like filling in the store. I'll be needing the toothpaste next month. I will be needing a cell phone this year. So someone in my shoes, what the person is doing is buying the things. We can see a surge in the prices, but and in the sales also. But again, so for someone like, when we put ourselves as a like someone in sitting in the US, and like the products getting affected by that Trump tariff, the person knows that this will get changed anytime. So yeah, slowly the person will like get into buying. But definitely, if I was there, I'll be filling in my storeroom with the stuff that I'm gonna need for rest of the year, everything. I must say. So yeah, sales may go high, and as you know that generally what I have seen over this year, that like at the end of the year, like what I say can say is like during Q4 most of the time, the markets again they change to slide. In Q3 they rise, Q2 is like something they make it steady, Q3 then they rise, and then Q4 generally there is a fall. So yeah, at this point I think Q2 can see a rise. Q3 may be more into stabilization. Q4, yeah, if things goes good, there won't be a fall. But again, we don't know. The geopolitical thing is always under the question, and the crude prices and how the thing fuel goes into the major reason why everyone voted for Mr. Donald Trump was he's going to slow down the war. He's going to stop the Ukraine and Russia war. Well, that's not happening, and there is always a chance of inflation and things staying high. I have seen it among my friends who they are always discussing how things went up suddenly because of the war. So yes, this thing I believe for Q2 the prices will be like still like better. Q3 could be better. Q4 is
Interesting.
I think Anupria actually makes a very, very interesting point here, which is on the importance of channel checks, right? Which is basically like this is one of the few points in time where it actually pays to have the ability to go out and observe what's actually happening on the ground with a lot of these businesses, right? It's one thing to sit in your Wall Street office and kind of make some assessment about Apple's phones. It's another one to have a network of kind of people on the ground that can report back to you, like what's the situation in the Apple Store in North Carolina, what's the situation in the Apple Store in India. So I think that's actually it's actually a very, very worthwhile point to make, that given the level of uncertainty we have on prices and on quantities, now is a very good time to have a good channel checking network that is widely distributed, to give you kind of a better picture of what's happening on the ground, because there's not a lot of visibility coming in from kind of top level numbers.
No, I think that's a good point about the channel side of things. And just to sort of switch slightly, we haven't talked a lot about it till this point, but the sort of AI investment ramping up, hyperscalers pouring billions into infrastructure, and not just to grow, but to sort of stay in, I guess, the long-term game. What's your thoughts on that, particularly around in the earnings this time, seeing more perhaps board signaling that these are strategic moves, not optional ones? What's your thoughts on that, Alex?
Yeah, so I mean, we're following the playbook that I think a lot of the companies outlined at the beginning of the year. So there haven't been many surprises in the Capex development and Capex spending, which is probably slightly surprising that there haven't been surprises. I think I at least would have expected some companies to down talk some of their Capex plans, but that clearly hasn't happened. There've been kind of continuous rumors of Microsoft and Amazon in particular kind of delaying or shelving some expansion projects, but they seem to be still on. The company's been quite aggressive about denying these stories. So it's interesting, right? It's a massive spending that is scheduled for this year. Across the board. I think we'll definitely get another view in the spending tonight with NVIDIA, but it's still going to be massive. But the top line metrics we're seeing coming out of ChatGPT, out of Anthropic, even out of Microsoft on AI usage are still incredibly strong. We are, I think, moving to a lot more, and this might be kind of nitty gritty, but we're moving to a lot more inference spend. So we're using AI more than we're actually kind of spending money on training an AI model. A lot of the spending has shifted. We're having a lot more costly inference, right? If you think about reasoning models, which is the big thing that ChatGPT, but also most of the other models are now using. If you think about deep research models, so you ask one questions, but then it's like 15 calls to do something. It's getting a lot more expensive to do inference. And a lot more resource consuming. So it still remains kind of interesting to see. I don't have a kind of good grasp on how much of this Capex schedule that a lot of companies are under is real and how much of it is, they don't want to walk back some of it. But it's clearly, at least in Q1, it's clearly happening. There's no indication that anybody has slowed down spending.
No, and Priya, what do you think in terms of the hyperscalers? Are they still spending big on infrastructure?
Well, I believe yes, they are spending big, and it's like huge. But the second point that comes in is most of the products are competitive. If I am looking for an answer, I can at the same time look in chat GPT, I can look into perplexity, I can look into meta AI. So the second question is like, would they need to, their investment goes into the same way, they are like competing for the same product, and at one point it is more like the customers, they are going to make the demand instead of the companies, they are making the product. Like they are just like giving in into more of what the customers are asking in, like instead of them making the product. I mean, Apple has their own environment. It has an own entire ecosystem, Apple ecosystem, where you step in. And ChatGPT, when it came in, it was performing. It's like a generative AI, but for like the rest of them, they are getting into tough competition. Their R&D investment needs to be really good, and then comes the big question whether it is essential or not. Because we saw with another competitor, like with the Apple's the $1 billion driverless car project, it didn't actually go well, and $10 billion project it was sold. So it brings back that whether it is necessary or not at this point, I think.
No, I agree. I mean, I think as I agree with you. I think as Alex said a minute ago, there was no surprises. The only surprise for me, sort of slightly the other way around, was that we didn't need to see too much AI to see Disney building a theme park in the Middle East. I thought that was one of the nice non-AI capex spends that I quite enjoyed reading about. But you mentioned Apple there, and when I read Apple's earnings, I was particularly impressed by the fact that, their services are growing, fast, even as sort of hardware slows. And do you think this is a sort of playbook others can follow as well, or is it because of their ecosystem itself, which you just touched upon? So I'll come to you first, Anupriya, then your views, Alex, on Apple's earnings in Q1.
Yeah, the Apple services that has a significant contribution. It contributes about a quarter of it, but and when other companies tend to follow it, the big question is like there are only two type of customers as I can see. A first group who is ready to step into the Apple ecosystem, buy all of their products, and the second one who doesn't want to. So when I am not buying an Apple product, I'm also agreeing to have a diversified. I can have my Apple iPhone along with a Bose earphone or something, and instead of taking it to the airport, and instead of taking the services perhaps. But when other companies can like jump in, they miss a major market, which is the people who don't want to get into an ecosystem. Someone, a company like Samsung or any other cell phone manufacturing company, if they start making products similar to Apple, I believe they miss out the niche market they are serving, which like is giving an opportunity to a buyer to use anything they want with their product. This is something I believe the companies can get into, but it's under question. And second thing is, this is basically followed by customers who are loyal. So someone who is already loyal to an Apple, it will be under question whether he wants to switch from Apple to Samsung or not. I personally, the if I don't get much into Apple products, I won't be switching into Samsung suddenly. It will change everything. So yeah,
Mm.
that pooling is tough.
Do you think that ties a little bit back to, with Apple particularly having recurring revenue streams, is more makes a firm more resilient in slower cycles? Do you think that's true?
It does, yes, it's true. But at one point, like they are missing out because, as mentioned, that they should have taken the ground report, as Alex mentioned prior. So, what I have seen that Apple is missing out in the few of its quarter sales in China, because there is a particular company in China whose products are hitting the iPhone sales. So, even if these services tend to generate the revenue, in the long run there will be people stepping out of the ecosystem. At one point people do get bored of using the same thing. So yeah, at that point, like this may not contribute that much to the revenue, I believe.
Alex, what's your thoughts?
Yeah, I think Apple is clearly in kind of in a very interesting and weird spot, right? They are on the hardware side, they're challenged by, basically somebody shouting at them and telling them where to produce stuff, which cannot be helpful for their margin. And on the services side, I think now it's the first time where there is like a proper legal challenge to their App Store model, where they recently kind of announced that they have this I think 20 or 30 billion contract with Google on making Google search the most prominent search on Apple devices, and that ran into some antitrust issues. So I think they are kind of a bit squeezed on the service side, and I think now is for the first time you can actually see that their monopoly on being the only service provider on Apple devices might break.
Yeah.
And I think then it's they haven't really made any major strides on the AI side. They are the only one of the big tech vendors that doesn't do anything really in AI, right? They have this OpenAI partnership, but that's about it. Might turn out to be kind of positive because they can just do a best of breed thing, just plug whatever model they want and put it in the devices. But they really haven't succeeded there. I think that's a strategic challenge for them. So they're kind of in a weird place, where it's a bit uncertain what's going to happen. The big risk factor for them, though, is like what's actually going to happen to hardware margins if they really have to move production. Might they move production just to India, a lot of production to India? But like, what's going to happen if they really have to open up a factory in Wisconsin to, put together iPhones?
What do you think of that in Anupriya, moving factories to India? What's your thoughts on that?
Uh, what I'm seeing over this is the tariff charge comes in, and there's like it's always fluctuating. Margins do get hit, and again the all with the geopolitical frictions, the supply chain may get hit. So it like may not be a good idea right now. And yeah, even if the tariffs comes in, like if for any advantage, then it could be like possibly. And again, Apple has a good market in this part of the world also, like includes like India, China, and all other countries like Malaysia and Singapore. So it will be easy for them to approach that. But for the US market, shifting the factory from here to here is a tough job. They will be missing out the nearshoring advantage which other retailers are taking in. So yeah, it may not be a good idea.
And even for Apple, right, an organization as sophisticated as it probably gets on the supply chain, right, it took them 3-4 years to set up the factory in India, to set up manufacturing capacity in India, right? It took a long time, and this is probably the most sophisticated supply chain organization that you find around the world, right? They made the head of supply chain the CEO. I think there's very few organizations that take supply chain so serious, and for them it took them multiple years to do this. I don't want to know what happens with less sophisticated operations.
Yeah, I agree with you there. I mean, but what do you think, Alex, is driving their approach at a sort of exec level to being different to others? As you say, they haven't made any major moves. Do you think that what is it that you think that's driving that strategic thinking? Because it's very different.
I think it's an understandable bet to make. I actually think it might turn out to be a very smart bet. Because what you avoid not betting on a model is you avoid the meta situation where you're spending 60, 70 billion a year in Capex, building your own model, building up some infrastructure. And with no disrespect to Llama, right, having an also ran model that might work very well for what you are doing, but that clearly is not ready for consumers. Or is at least not a best of breed model for consumers. So I think your bet really is, right, I can avoid spending 50 billion to get a model that makes sense, and I'll just get whatever OpenAI, Anthropic, Google, whatever model that I decide is kind of good for me on my devices, and I don't have to make this investment, right? I'm not going to get a differentiated model, but I'm Apple. I don't care about having a differentiated model. I just want to have a model that works. Yeah. And I can really get the user experience maxed out of it, get it tightly integrated to my ecosystem, and that will be enough, right? I don't have to have the best model. I have to have one that works well in my ecosystem. And if you see what they're doing in a lot of other areas, right? I mean, and don't necessarily have the best camera anymore on the phone. They don't have the best headphones. They don't have the best really of anything. But it's tightly integrated into the ecosystem. It just works, and that's sufficient. And I think their bet on AI is the same, right? It's I'll just get something that makes sense, that works, but I don't want to invest 50 billion in getting there.
I'm actually the reason I asked a question because I faced similar challenges when I was in HSBC with some global programs, not quite to the scale of whether AI Capex investment, but in terms of cross-border payments. But it's an interesting one. I mean, for me, I've always been mindful of that phrase: perfection is overrated. And I think when you look at their approach, as you say there, look, this works, this fits. Let's see. Let's not jump in, follow everyone else. That does seem to be a strategy that they've adopted that is markedly different. I just want to we've got 10 minutes left. I just want to come to some questions around, we've talked a lot about, what has happened during sort of Q1. But I guess a question there is how to analyze what's happened, particularly around AI co-pilots or AI analysis is speeding things up. What impact do you think AI analysis? We sort of semi-joked about avatars presenting results. What impact do you think AI analysis is now having on investor relations teams and portfolio managers? I'm curious about that. Alex, probably to you first, given obviously you do a lot of work with Marvin Labs as well. So it'd be good to get your thoughts on that, and you, Priya, afterwards, because I know you use several tools in the work that you do.
Yeah. So I mean, it's clearly being an efficiency driver for the industry, and I think it sounds a bit lame almost, but it's a good thing for the industry to just have this efficiency driver. I think what AI really allows the industry to do is it cuts down on some effort in reading stuff, in reading filings, in reading legal docs, in reading and following investor presentations that kind of ultimately doesn't contribute value, right? Because you don't need to listen to the 7th time that an executive makes the very same statement. You don't need to read 200 pages of 10K filing to get the gist of it, to get the relevant parts of it, because a lot of it is boilerplate language. So I think that really is where AI shines. It's telling you what you can safely ignore, and it's telling you what duplicates are, and that allows you to kind of to be more efficient. And then it has some diarization function, right? It helps you. And one of the things we're working on right now is this feature where we'll keep track of what companies said about the future. So, if the CEO makes a statement, right, next quarter we expect our margin to be 50%, then we'll log that. And come next quarter, we'll automatically evaluate that. And this is not this is not unbelievable work that only an AI can do, but it's tedious work. And we hear from a lot of investors that you'll jot down these statements, but then you never evaluate them, and you very much don't do that at scale, because a company makes 10 statements, 15 statements on average per quarter, multiplied by the 50 companies who cover, right? That's 750 statements. You're not realistically, you can't police them all. You can't figure out whether all of them are true. So we'll do that with AI. AI is just, it just does it. It diarizes it perfectly, and it will then auto evaluate it also perfectly. I think that is really what AI does. It just helps you with a lot of the tedium of being an investor, of keeping track of what people said, of what people promised, what people did, and allows you to do this at scale.
I think you make some very good points there about the speed, the tedious stuff, boilerplate. And you, Priya, what's your thoughts before I add some thoughts as well?
What I'm particularly saying over here with the AI, like the generative report one, because I have been following the Marvin Labs report. I get it summed up, and so instead of going through all the pages, I get a summary. But one thing I must mention is that it is good for the trading purpose. Once the CEO is saying that they are going to take a good strategy for growth for the next quarter, because bids are getting placed, so the share prices are like increasing. That's a good opportunity for me as a equity trader. I'll opt for it. AI is helping the fund manager in that extent, but at the same time, when you look for someone like investor relations team, they have to be more critical right now. They are now presently their job is tough. They have to make the report in such a manner that AI is capable of extracting it. So that's a big question. They need more tables within the document, more charts, and definitely that's a tedious one. And at one point, it is also true that it helps me trading and it helps me more into the options part. But again, for like companies with like huge fund within them, like the sovereign funds or something. For them, they are like using it more to filter out the noises. They are still like employing people who will actually go through the financial statement all by while just find out if they're missing out something. They'll be like, yes, it's not exactly removing human, but it's making the job easier for them. It's good.
I think that piece you've just summed it up there very well. With it's not removing the human, it's improving. Somebody in another company I'm working with said that it's a bit like saying, you dig a hole with a spade, and of course you'll dig a hole with a spade. But if somebody turns up and gives you a digger, you'll dig a bigger hole and you'll dig it quicker. But you still need to have somebody know how to use the digger and use it safely. And I thought that's a really good analogy, that you wouldn't go back to using a spade if a digger was sitting there and someone could show you how to use it and be more efficient and more effective. I also think for me, reading through lots of the earnings releases this quarter and seeing the differences within the context of tariffs that we've talked about and the geopolitical landscape, it's helping me understand it's less about what has happened, because that tends to be quite black and white now, and more about how do I try and interpret it. Back to our questions about people saying, okay, what has happened is we won't put our prices up. But how do I interpret that? Do I actually believe that, or do I not believe it? And I think Alex's point about then looking in the future at what did somebody say previously and comparing it back with fact checking, and then also looking at what's the same, what's new, and what's different between earnings releases, I think is incredibly powerful. And to do that as a person takes me an enormous amount of time versus using AI. I'm particularly interested in that sort of guidance and fact checking, and that's something I think is really, really important. And I think to your point earlier, Alex, where you said it's going to be difficult to know whether a CEO or someone has made a statement that can be trusted or not, or they put their hands up and say it's not true. I think the guidance type of tools that you describe will become more valuable in Q2, because that's when the sort of rubber will hit the road with some of the statements from Q1.
Yeah, I think, one of the reasons why we're building this, right, it's having the ability to do good forecasts and communicate them well is like highly correlated to managerial skill, right? And eventually, as an investor, a good chunk of what you have to do is you have to evaluate managerial skill. Is the CEO, is the CFO, is the head of IR, whoever you want to judge, are they actually good operators? And having the ability to do good forecasts, and then also having the diligence to, just not just share an off-the-cuff prediction that you've made on the spot, but just share a kind of forecast that you are believing in, and that you have kind of some, that have some analytical verification. Just share those in public. It's highly correlated with managerial skill, and I think for us it's a good data point for people to then have and actually make sure that what they believe are good operators, are good managers, are actually that.
I think that's a very good point about quantifiable evidence and evidencing. I've worked in multiple companies where even profit graphs that are horrendous hockey stick J curves that have no chance of becoming reality are accepted because they've been properly quantified and written down on paper, versus an off-the-cuff comment about this will be worth 10 times in 5 years' time, etc. It's fascinating to watch behavior of, if you put something down and quantify it, people tend to become more accepting of it, as opposed to, as you say, off the cuff.
Yeah, and it's important to kind of. So I think managerial evaluation, in particular from the outside, is it's difficult, right? Like, there have been books written about judging people's handshake and the jib of their whatever, and I think a lot of it is like fairly soft factors. It's probably not terribly scientific, and even if you think about the amount of interactions you have with management teams as an investor, right, they're limited, right? Like, did the CEO sleep poorly before he had the investor meeting? Is there a fight with their wife or their kids or their husband or their kids? So really, it's a question of kind of how do you do this with a slightly more objective standard, with a slightly more kind of thought out framework compared to, oh yeah, the guy played lacrosse in university, he must be a good athlete and he must be diligent, and that's why kind of he's a good manager.
Right, we're up on the hour. So on that note, Alex and Upriya, that was a good discussion, I think, where we talked through not just what has happened in Q1 earnings, but how to interpret it. These events are monthly, so if you're watching, please join us for the next episode in June, where no doubt we'll be talking through some of the same topics around tariffs and Capex. But as Alex said, with Q2 coming up in a few months' time, it will be very interesting to see how many of the facts that have been mentioned and opinions and views in Q1 hold true. Now, we all need to probably go and grab some coffee and a few hours before NVIDIA posts, and then that will be another round of insight and discussion. So thank you, Alex, and thank you, and Upriya.
Thank you, James. And let's hope that we really don't have to spend the rest of the year talking about tariffs.
Hopefully not. Thank you.
Thank you.
I think a very large